Awesome. So what I'm going to do, I'd like to go ahead and just quickly introduce everybody to master trainer Gary Albrecht. And in Gary's former life, he was a top expert on pharmaceutical and medical education marketing, and he's presented to some of the highest rated outstanding physicians in the world and explained super complex medical protocols to them. So Gary then turned to this amazing gift of explaining complex ideas and activities to trading education. Now, Gary refers to this as his true calling, creating trading software and educating students. And he never looked back once he made that decision. Gary has been educating students around the world for over a decade now, and he is absolutely passionate about providing his students with an unparalleled trading software and trading education, and his primary goal is to make sure that everyone who uses his system and follows his suggested rules does not fail in training. And so, with that being said, Gary, I'm going to go ahead and pass it on to you. So.
Okay, Michael, thank you very much. Can everyone see my screen? Please type in yes. Everyone can see my screen.
Yeah, we're good to go on my end as well.
Thank you very much, everyone. Okay, great. Thank you, Michael. My name is Gary Albrecht. As he mentioned in my introduction, I'm the founder and CEO of GPA Trading Services. I don't know if Eddie Z is still online, but you can see I have quite a trading mecca, as we call it, as far as a wall of wonder with multiple screens and monitors. So I agree with having the proper equipment in order to trade with. I'd like to briefly introduce my lovely wife. She's the co-founder of GPA Trading Services, and she's my partner. I'm going to go through a couple of slides. This is our website. If you haven't had a chance already to view our GPA Trading Services website, we're very proud of our website and the services that we provide. We have a brief photo of our family. It's my wife and I and our two trading daughters, mascots of GPA Trading, Fancy and Felicity. And those of you pet lovers would appreciate this screenshot. It is of Fancy and Felicity enjoying their summertime with a cool beverage as they're about ready to go swimming. So let's get into the nitty-gritty. Today's topic is anticipating future market conditions utilizing multiple time frames. The key to trading, the bottom line, is after 20 years experience, being in the market tens of thousands of hours, creating and developing software for the last 10 years, is understanding the principle of multiple time frames. So before we get started, a standard disclaimer. I just leave a pause for a second as you read the standard disclaimer. There are risks. We have very specific rules that we announce in each and every class. That being, money management rule is a critical component. Never trade more than 2% of your entire account balance on any one given trade. For options traders out there, never risk more than 5% of your entire account balance on any option trade. And this is the standard disclaimer as we move forward. So, without further ado, let's go into the live market conditions and understand how multiple time frames can help me as a trader not only entries, exits, and take profits, but how do we know when we're in long-term trades, how do we stay in them versus short-term corrective markets when we should be scalping the market. Well, as we go to the charts, we can see, and before we do that, I'd like to ask everyone, are you primarily stock traders or Forex traders? Please type in S for stocks, F for Forex. I'd like to get a sampling of what type of traders we have out there. Looks like I see some S's, I see some Forex, futures. Well, the good news is when we're finished, this multiple time frame works on all types of trading. So it looks like all the above. I see several both. I see stocks, Forex, options, futures. Great, that fits in perfectly. So let's start off with the stocks that we have to offer. And this is one here, as you can see, this is Netflix. In our multiple time frame analysis, I want you to notice a couple of things. When we were in class a few weeks back, when Netflix was in the process of topping and rolling, you need to have some sort of indication as to when is this uptrend over and when is a true trend change underway. And that's looking at the direction of multiple time frames. In this example, we could see the daily was in what we called overbought conditions based on these two indicators, the trend momentum and the price action. It tends to depressurize and slingshot higher and higher and higher as far as the daily is concerned when the weekly is still moving up. So as we go to the left side of this blue line, we're going to see the weekly is in the process of moving towards the upside. And then we're going to see later, as we look to the right side of this line, the weekly is going to start to top and roll and head down as the daily is topping and rolling and heading down. So the secret to multiple time frames is understanding exactly how the time frames are lining. So as we can see at that moment in time when Netflix peaked out up at its top in reversal, price was at a high around 457 and ultimately moved down to so far a low of 299. Well, that's well over a $158 move. Option traders, can you make a large sum of money when you know a stock is going to plummet some excess of $100+? Well, this is the key in understanding what is price doing. During this uptrend, well, how did we know this down move was not a top in reverse when price moving lower? The software, as time frames are cycling within each other, shows that it tend to what? Slingshot higher, slingshot higher, slingshot higher, slingshot higher. And it's in the process of doing it now during this retracement. Well, what do you think is happening on the left side of this line on the monthly? The left side of the line on the monthly is moving from oversold towards overbought. And since this top in reversal, we're seeing the monthly start to turn over towards the downside. So, as we were in class, and we do live trading classes 3 times a week, on average about 2 hours per day, usually run about 3 hours. But we can see at this point in time when this process was topping on Netflix, we told our students based on a monthly topping and rolling, a weekly topping and rolling, and a daily topping and rolling. Let's review that real quickly. A monthly topping and rolling, indicators turning over, a weekly topping and rolling, indicators turning over, and a daily topping and rolling, indicators turning over. Knowing I have the multiple time frames in my favor, we would expect price to move lower. Well, you're going to notice as I explain the multiple time frame, I'm going to be able to show you how understanding how the time frames cycle, how you can anticipate price in advance where price is going to go. And we have this live in our archives as we archive each class if you're unable to attend, that we have this call as this information relate itself. We were giving you targets up here to shoot for days and days and days in advance. And we were looking for very specific signs and symptoms that would play out to then set the tone. When was it time to go long in these retracements? When was it time to sell? So ask yourself, is my monthly's topping, my weekly's topping, and my daily are topping? Well, they say indicators are lagging because they lead price to move before they move. Well, the combination between the two and looking at multiple time frame actually makes indicators into leading indicators before they happen. So for example, as my monthly started to top and roll, my weekly started to top and roll, and my daily started to top and roll, we expect to see specific signs. So we go to a 4-hour. Well, my 4-hour was also topping and rolling. So we had what we call a slam dunk. The 4-hour, the daily, the weekly, and the monthly all located in overbought conditions ready to move lower. And notice, we get these particular signs and symptoms as time frames cycle within each other. It takes a 4-hour less time to go from overbought to oversold than a daily to go from overbought to oversold, then a weekly to go from overbought to oversold, and a monthly to go from overbought to oversold. And this phenomenon of triggers, this is part of the software that looks at the multiple time frames aligning together to give you entry criteria, and the process of this slingshot phenomenon, Please notice it doesn't matter what symbol, whether it's stocks, options, futures, commodities, doesn't matter the symbol we use, you're going to see the same scenario play out over and over. So on my daily, 4-hour, weekly, monthly, all topping and rolling together, we can assign very specific activity that's going to occur. You get a trigger for your entry, but what if I miss that trigger to go short? And I'm in this trade trying to understand, well, should I continue to sell rallies in a downtrend, or am I looking to buy the dip before it goes in an uptrend? This is the key to multiple time frames. When we see multiple time frames topping together, then we're going to expect it's not going to be a dip for a future high, it's going to be a trend reversal. And notice what this software does. My 4-hour tries to slingshot higher here, price rallies but fails, then it moves lower. Then as it bottoms, it slingshots lower. Bottom slingshots lower. Bottom slingshots lower, and one large one, bottom slingshot lower. So we can anticipate this in advance. How do I know that? Because whenever a 4-hour is moving lower with a daily moving lower, we're going to see the 4-hour, should it slingshot up, it's going to fail. So when it does, that's an entry to go short. Then once the 4-hour bottoms, as we see here, goes to form this slingshot down, we're going to sell that rally. Then it does it again, sell the rally. It does it again, sell the rally. It does it again, sell the rally. Now notice on the left side, my 4-hour tried to go higher, failed, giving me a price pattern reversal, a high, a low, a lower high. Then proceeded to make lower highs and lower lows as we went on down. Well, even after this deep retracement, it still came down and made a lower low. Well, to the right side of this equation, what's changed between here and here? Well, my 4-hour stopped slingshotting lower, lower, and lower. Now this time it tried to slingshot lower and failed, meaning it did not make a lower low, and it made a higher low, a low, a high, a higher low. Then it proceeded to do what? Slingshot higher. What is it supposed to do next? Well, as long as the daily is still pushing higher, which it's getting close to overbought conditions, right? So you think, well, we don't know if the daily is going to continue higher. Well, a sign and symptom, as we refer to, is when the daily is ready to retrace down, or in the case, retrace higher, either direction. When it's ready to retrace down, we're going to see the 4-hour try to go higher and fail, and that's a sign and symptom, as we call a price pattern reversal, but it's a technical sign the daily is ready to retrace. Everybody see that? So what did the daily then do as we move lower and lower, dropping over $150? My daily tried to slingshot higher here. It failed, moved lower. Then as it bottomed, it slingshotted lower and lower and lower. So both the 4-hour slingshotted lower, my daily slingshotted lower, and why is that? Because my weekly is pushing lower. Up until this latest point, my weekly started to slingshot back up. My weekly started to turn over. So when that occurs, the only change between all of this downside movement and slingshotting lower and lower and lower is the fact that now we're in the midst of a weekly style retracement. So during our class, we'll tell you, hey, I'm expecting this to go lower. We give you specific targets. As they slingshot, I tell you, look for the formation of a slingshot. When it forms, sell it. When it forms again, sell it. When it forms again, sell it. Then the only difference now is my weeklies change directions. So everyone loves Fibonacci's. Fibonacci is a very important tool. But if you don't know when to use a Fibonacci for a retracement, to whether is it a true Fibonacci retracement to a lower high and ultimately going to make a lower low, that's where the multiple time frames come in. And we get these signs and symptoms based on the multiple time frames cycling as what's the difference here. Notice on the daily tried to slingshot up, failed, moved lower, slingshotted lower, lower, and lower. Then all of a sudden it stopped and didn't succeed. It failed. Well, isn't this similar to what the 4-hour did over here? It slingshotted lower, 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 lower. All of a sudden it failed. Now it's slingshotting higher and higher. What's changed? My daily's turning up, and all of this time moving higher, my daily's turning up, as well as my weekly is turning up. So it's a very simple process. You look left before you trade to know what the lower time frames are doing. You look right before you trade, because then you know whether is this entry going to be a short scalping type of scenario, or is it going to be a longer term, multiple day to week style of trade. So what's next up on this? The next up is basically we have a monthly in the process of topping and rolling. So my weekly turning up should prevent us by breaking a new high. So we're going to look for this weekly slingshot up to fail. And when it fails, that's a beautiful shorting opportunity, as price on Netflix is supposed to go lower and break some new lows. Well, notice how it transitioned, the same scenario with the daily. The daily tried to slingshot lower as my weekly was turning back up. So what do we look for? The daily to move higher. And this is where in live trading class, I specifically gave you these targets, and the students can attest. We do this days in advance before it happens, and they're like, Gary, how is that possible that we're able to anticipate what's going to occur before it even happens? And that's because the time frames cycling give very specific signs and symptoms. We call it a line of progression. Well, my next line of progression here for Netflix, as my daily starts to top and roll, it's either going to top and roll and move lower, or it's going to depressurize the slingshot higher. Well, how do I know as it starts to pull back, is this going to be a simple, oh, that's the end of this retracement, and down goes Frazier, and we're moving all the way down to a lower low? Or is the daily going to depressurize, meaning come out of this tight overbought area and move to slingshot higher as it did over here? Is the daily going to slingshot higher, higher, and higher? Well, high probability is going to tell us days from now, as this daily starts to form, then engages. As long as my weekly is still pushing up, then yes, we're going to get another higher high. But days from now, should this weekly turn and hook back down in a slingshot down scenario, then we're going to expect that daily slingshot to fail, give us a lower high, and start the big descent. Like we had here. I had a weekly turning up, and before the big move unfolded, my daily tried to slingshot lower right there, failed, turned and hooked out, and that was a huge move. And if you look at this in perspective, hey, options trader, are you able to make a nice gain on an option play from a swing point low of 314 to a swing point high of 42? That's like an $87 move. And we gave this to our students days in advance, that that's what we're looking for a weekly style retracement moving higher. Simply using the cycle of time frames and looking at the direction of the trend. So I'm going to leave you with this. The trend momentum, as this is called here, trend momentum, its job is to go from overbought to oversold, overbought to oversold, overbought to oversold. And the only time that process is interrupted is through the process of slingshotting higher and higher, or slingshotting lower and lower. And how do we anticipate that in advance? We look to the right, meaning the higher time frame, and say, okay, daily, as I'm starting to bottom and start pushing up, should I expect it to slingshot to a lower low? The answer is yes, when the weekly is pushing lower. But since the weekly is now pushing higher, should we expect the daily to slingshot to a lower low? The answer is no, we expect it to fail. And these are key entry points. We go along with not only entry points, but it's about the cycling of time frame. That's where these triggers come in. And we also can use that on any, and this is just Netflix. Let's look at gold, for example. In the midst of a live gold trade that we're underway, we're up 4,425 pips. Well, this system includes an automated trade management system. Once you're in the trade, we can ultimately have the system enter the trade for you, manage the trade for you as it continues to run. There are many components to the software that we're going to briefly review, but the key point is today your lesson is learning whether you use this software or not, you need to understand multiple time frames. That is your key to success. You need to have some sort of gauge to tell you when a time frame is cycling, when is it over. And this is where the combination between the trend momentum and the price of action indicator gets into consideration. It's going to slingshot higher and higher, and here's gold, right? When do we expect a daily, once it's in overbought conditions, to slingshot higher, higher, and higher? We expect this scenario to happen when what? Anybody type in the answer? We expect the daily, once it moves into overbought conditions, to slingshot higher, higher, and higher when we look at a weekly and the weekly's pushing higher. Everybody see that? So I'm not going to change this because I have a live trade running. I'm going to go to gold on a different platform to just show you what is it doing as far as the software is concerned and how we can utilize that to anticipate in advance what the software is going to do. Well, of course, we actually give trade alerts. We give specific pictures of what the trade alert looks like, and we use Elliott wave as our turn-by-turn instructions. We use the software and the multiple time frames turning together to give you a scenario. The bias is gold is going to continue to stair-step lower down to 1205/1182 before it reverses and then moves up to 1433. That's well over a $200 move. So how can we anticipate price is going to move lower and why we're short on this trade and expect it to continue to go much lower? As I was showing you those time frames, my weekly is in the process of moving lower, right? While early on, while this kept slingshotting higher and higher during that phase, my weekly was pushing up. So back to the daily. This is how easy this system is. It's simply a matter of understanding when the time frames are aligning, which direction is the trend of that particular time frame. So over here, we see the weekly bottoming, pushing higher. To this point, the weekly starts to top and roll. And during that phase, my daily tries to slingshot lower, fails, then proceeds to slingshot higher, 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 and higher. Why is that? That's because the weekly is in the process of moving higher. Everybody see how simple this is? I need to look left and I need to look right. Before I trade any particular time frame, I need to understand what they're doing on the left side of the equation, looking left, and I need to look to the right to know as they're doing something, what are they doing it in direction of? So we can see based on this weekly, yes, we had a weekly starting to top and roll on this side of that blue line. And on the early side of the blue line, when the daily was slingshotting higher, higher, and higher, it's because the weekly was moving higher. So let's look at the daily. What's my daily doing? My daily's bottoming. My weekly's bottoming. So we're getting a weekly / daily move higher. In the midst of that, my daily tries to slingshot lower, fails, turns and hooks out, moves higher. Then as it tops, it slingshots higher, slingshots higher, slingshots higher, slingshots higher. Well, we can anticipate this in advance. As my daily starts to top and roll, I expect it to slingshot higher while my weekly's still moving higher. But now look at the right side of the equation. The weekly is pushing lower. So notice what the daily did on the right side of this equation. The daily moves lower and then it slingshots lower and lower and lower, and that's what we see unfolding currently. So we still have a daily pointing down, we have a weekly pointing down, and we have a monthly engaging lower. Here's the slingshot engaging. So while we have the monthly saying lower, the weekly saying lower, and a daily still saying lower, we expect gold to continue to stair-step lower. You ever heard the term stair-stepping? Price always stair-steps. It never moves in one direction. It always stair-steps in a direction. You ever ask yourself why? It's because the cycling of time frames. As the lower time frames are with the higher, it moves in one direction. When the lower time frames go against the higher, it cycles. Then they return back with the higher. Against, with, against, with, against, with, and that's part of the stair-stepping phenomenon. Well, after 20 years of trading and 10 years of developing the perfect indicators that help me anticipate future market conditions before they happen, this is the key, is understanding the cycle of time frames. I use the 4-hour as the bellwether. It is the gatekeeper between the lower time frames and the higher time frames. And we have very specific rules that say we're not going to trade with the software until the 4-hour, 1 hour, 15, and 30 all join forces. And once they do, we need to know, well, as they're joining forces, what are they joining into? Are they going with the daily or against the daily? So everyone, you can choose any point in time. You can go back weeks ago, months ago, not only in the past action, but in future market conditions, how it's going to play out. So, for example, what did this do? My weekly tried to engage higher, failed. Then as it bottomed, it started to slingshot lower, lower, and lower. Well, that's a weekly. And during that phase of going lower, lower, and lower, it ultimately did what? My monthly, during that process, is still pushing lower. Everybody with me? Pretty simple concept. During price, even no matter what time frame I'm selecting, the software will try to slingshot higher and fail when it's going against a higher time frame moving lower. Then, once it bottoms, it's supposed to slingshot lower, lower, and lower, over and over and over as the higher time frame continues to cycle. Then once the higher time cycles, it gets a change in direction. So ultimately, my weekly did change direction, and we had some very strong trades during this cycle back up here from this low to this high. We gave targets of this thing to turn around at 1390. Well, it turned around at 1392. But we gave our students specific target, and we told them exactly what to look for based on the next line of progression. How many football fans out there? The most exciting quarterbacks and most successful quarterbacks are the ones that know about line of progression. They look for their receiver number 1. If he's covered, they look to receiver number 2, number 3, number 4, etc. Well, the same with the software. Once you understand the cycle of time frames, because time frames cycle, the software gives me repeating indications when to trade, when not to trade, what to look for, and while I'm in these type of trades, how long can I expect it to run? The key is, hey, I want to sell the rallies in a downtrend. Well, I need to confirm I'm in a downtrend in order to sell a rally, instead of trying to sell a rally in an uptrend. When would I know not to sell a rally in an uptrend? It's based on the time frame cycling. So we showed you gold, we showed you, now let's look at a quick Forex. It doesn't matter the symbol, the same rules apply exactly the same. So we'll go over here to the pound dollar. Notice what the pound dollar did most recently. And we're actually in a pound dollar trade as we speak. Right here, I'll show you I'm in this trade on the pound, a live trade, and I'm expecting the pound to continue lower. I'm up 171 pips, and I'm going to continue to let this run as it continues to stair-step lower and lower. Well, why are we expecting the pound to allow this downtrend correction, downtrend continuation, and continue to let this run? Why? Because look at the cycle of time frame. So as I go over here, since I have the live trade running, I'm going to go to this platform where I can change time frame. We're expecting what? My dailies topping and rolling, my 4 hours topping and rolling. We expect the pound to start moving lower, topping and rolling, moving lower. My weekly is also in the process of topping and rolling. How simple is this software? It's simply looking at each time frame and understanding the direction of that trend on each time frame and how the previous time frame will tend to cycle within that time frame. So my weekly says we're going lower, my daily says we're going lower, and my 4-hour says we're going lower. So guess what the pound did? It moved from up here right at 20, what was it, let me get that high, 69.95, and proceeded to move down several hundred pips to a low so far of 67.30, 260 plus pips. While we have a retracement back to the upside, and we're seeing a downtrend continuation unfold. So what did we see? We have a weekly turning down. We have a daily, and this is where our students, and we rode price up on this rise because my daily was slingshotting higher, and we expect it to fail because it's going against a weekly topping and rolling. So when the daily went up here and failed, that's a selling opportunity to allow my weekly to continue lower, my daily to continue lower. Everybody say it? So it's simple. My weekly's pushing lower, so my first line of progression is, should the daily try to slingshot up, it's going to fail. When it does, perfect entry to go short. And now that my daily's still pushing lower, what does the 4-hour do? The 4-hour tries to slingshot higher and fails, then it proceeds to slingshot lower. And we expect to slingshot lower. So it's simple. I'm looking at multiple time frames through the use of indicators that are specifically calculated to give you the cycle of time frames. It tallies into triggers when they go short, slingshots when they form and when they're engaging, and it's put into accumulation of several software components. You see the software on the chart. We have what we call a market scanner. You can scan multiple symbols at one time, and it tells you every time frame when slingshots are forming, when they're engaging. Here's an engaged one that's bolded. Here's one that's forming. And they tell you whether they're forming up or down. If they're red or pink, that means they're forming to the downside. Expect price to move lower. They're green when they're forming, and then ultimately when they engage, they'll go to bolded green. We also have those triggers on there we talked about. Triggers form when multiple time frames start to top and roll. It tells you automatically when the time frames are aligning to help you in your analysis of expected moves. And if that wasn't enough, we throw in the fact that we have a slice of heaven finder, and this is the one that sets up these large moves. This is a software that's calculating all the different symbols within MarketWatch. As we scan through it, it tells you when the dailies are aligning with the 4-hour and the 1-hour. And as they start to move, you have opportunities, line of progression of trades that last from days. And if this daily happens to be going in the direction of the weekly, like the pound is, we'll have opportunities to stay in this trade for weeks to come. So as far as multiple time frames, that is clearly your best bet in understanding how to trade. This is an example. I showed you some live trades. Here's some examples of our winning trades, and we expect to show that this is commonplace. Apple, we rode Apple all the way down. We have Apple moving higher, and I have a target zone of 627 up to 630. I'll show you in a minute. But these are just previous trades that we had big winners. Here's a trade on Google that was up 8,328 pips. That is a move of over $83. Here's one 193 pips on the euro yen. Here's one up 289 pips on the euro pound. Here's one up 440 on the pound. As the time frames align, you can get in these trades and let them run based on the cycling of time frames. We continue. Here's another one up 608 pips on the Aussie dollar. We have Aussie Swiss up 922. We have $69 move on the gold to the upside. We have 5,400 pips, another $60+ move on gold to the downside. Here's one 1,142 pips on the Euro Aussie. Our student submitted this from his trade station. He was running multiple trades, up 8,600 pips through multiple trades. He then went on to talk about how the pound and the slice of heaven software is leading him in the right direction as it continued, and this turned in from 8,600 pips to 18,311 pips. Accumulation of all these different trades. The system generates massive pips when the time frames align. Further trades, 29,000 on several trades, 39,000 on several trades, 54,000 on several trades. So I'm going to go ahead and open up questions that you may have while I go and show you what we're offering today. We're offering the Master Trader program, which consists of 3 components. It consists of the MPA PE2 software. It consists of live trading classes where we specifically go in and give you targets, entries, exits, take profits, how the software is setting up, anticipating the next move, and we also include trade alerts. Now, the software, as I mentioned, is consisting of 4 components. It consists of the market scanner. It consists of the slice of heaven finder. It consists of the slingshot trade triggers. That's both the triggers when to get in and out as well as the slingshot formations. And it includes the trade management system, which I've illustrated. So do we have any questions you'd like to attend? We have a special offer that's not available on our website and is only available through this presentation today. And it's for a trial to our service. What platform does it work in is the question. It works in MetaTrader 4. MetaTrader 4. So we're going to offer a trial to introduce you to this. And for the first month, we're going to charge $47. First month, PE2 software plus class plus alerts. After the first month trial, we then will go to $3.99 a month. So first month, $47. After the first month goes to $3.99. If you would like to take part in this trial, go to this link, www.gpatrading.com/GPA trial. Again, it includes all components. The software does run on MetaTrader 4, and as you can see in these platforms, we have access to over 800 plus symbols. As I open the Market Watch, access to over 800 symbols, including hundreds and hundreds of stocks, futures, commodities, ETFs, and stocks from around the world. And there are all Forex symbols as well. So we have numerous Forex symbols, all Forex you could ever want to trade, and then some, including hundreds of stocks. So a total of over 800 plus symbols in which the software can operate on, giving you multiple opportunities to get in on this exciting offer. Does it work with Forex platform? Well, if I'm running MetaTrader, I can have the software place a simultaneous trade. So whether I'm using FXCM, FXDD, any Forex platform out there, I use this as my entry signal, and I place that live trade in my account based on whatever broker I'm using. I've been trading this way for over 10 years, and I've never had an issue where I place a trade in FXCM or FX Solutions or any other ones. Duca's copy, you name it, from around the world, doesn't matter which platform, the signs and symbols get us in, and I've had students from around the world. Our site, you hear this all the time, but we literally have students from around the world that we educate. That's our motto, GPA Trading Service, educating the world. And we have literally hundreds of students from all over the world that have experienced the power of this software and this program. If you decide not to join after the trial, you simply send an email and cancel. So anytime between day 1 and day 29, you need to send an email and let us know you're canceling. please take in consideration, don't send it on a Sunday morning and expect to cancel it Sunday afternoon. We need at least 24 to 48 hours, business hours. Give us a couple of business days to do it, but no questions asked. Cancel at any time. Do we have any other questions? I still have 5 minutes left for those of you that want to ask additional questions. Yeah, there's so much to cover on the software, as I could spend 45 minutes on each component, but it does include the trade triggers and the slingshots. It includes the...
Can it work right away? Yes.
Yes, as soon as you join, you'll get an email confirmation with the username and password. You go to the website and you start to get the information, download the software. The first step is to download and install MetaTrader. Upon your registration, you're going to get an email telling you if you're interested in this platform that has 880 symbols. You're going to get a follow-up email.
That was a $47 trial. Post that page up again.
Yeah, it's a $47 trial. I'm trying to read these previous questions. It's a $47 trial, gpatrading.com/GPA trial. And it's also posted in the chat dialog. And Michael, would you make sure you post this link, please? www.gpatrading.com/GPA trial.
Sure thing. I'm going to post that right now.
So that we can see that for everyone.
All right, everybody, if you could just confirm that you received that link. I just went ahead and typed it in there. If you just type in a Y, just to confirm, Y for yes. Mike, Hilton, Carl, Gary, thank you. Joey, thanks everyone for confirming.
Okay, well, in closing, I'd like to say, Michael, thank you for the opportunity to present. It gives us great pleasure. Our heart and desire is trading education. We've been doing it for a long time. We have, we think, the best system on the market no matter what you're trading, Forex, stocks, commodities, futures. The signs and symptoms are the same as the time frame cycle. So thank you again for your time and attention, and we appreciate it. Y'all take a good day, and I'll talk to y'all later.